Hi everybody, this is Nicole Vanderstorm, the instructor for Accounting 2301 at Tarrant County College. Folks, welcome to the overview of our group projects for this semester. So if you go into Blackboard, and I'm going to share my screen with you so that I can show you so I can walk you through it. If you go to Blackboard, your class, and you go to Module 4 and you click on Group Projects, you will find the Group Project folder for this semester. And as you can see, I've got instructions loaded down for you, as well as some examples of some really good presentations that I have seen over the last semesters. Okay, folks? So at the outset, what I've done is I have included an article from Barron's on how to read the 10K. Okay? Literally how to read the 10K, being the annual report, in 10 minutes. So this takes you through the process of how to read it. And here's the article over here. Okay, so there you go. Please take some time and actually read through this. Great set of tips on how to work through the 10K document. All right, folks, so let's hit the first piece, which is going to be the project instructions for the group project. All right, folks, so at the outset, what I would like to let you know is that the group project is based on Chapter 50, and the purpose is so that we don't have to do it as a class, we do it as a group. And remember that this project counts for the same percentage as an exam for your grades. All right, folks, so the purpose of this project is for you to actually select a company and conduct financial analysis on the company and use the knowledge that you've gained in this class to actually tell me the story that the financial statements are telling us. Okay, so if you think about it, I've been teaching you US GAAP, which is the language that we use in our financial reporting, and our disclosure requirements and so on is the way that we are required to structure our sentences, for example, and our paragraphs, and what the rules of the language of accounting really are. Okay, folks, so the project that you are required to do is to research one company and provide me an analysis of that company. Now, the requirements are that the company must be a publicly traded company and that you should be able to find the 10K, which is the annual report, on the SEC filings. Now, the SEC is the Securities and Exchange Commission, or the Securities Exchange Commission, and this is the legal entity that governs all of the publicly listed companies to ensure that they are not only meeting US GAAP requirements, but additional requirements by the SEC for publicly listed companies. All right, so this is what you do. You're going to do a business overview for me. It's going to be 5 or 10 minutes long. And what I would just like to point out over here is that these are sample questions. You are not required to answer every single question if you don't think it's relevant, but you are required to add additional points that you think are relevant, okay? Then the next piece is your financial analysis. And what I ask is that you compare at least 9, so 3 per category, year-over-year ratio. So you have to be comparing the prior financial year to the current financial year. So this may mean that you have to download 2 years worth of financial statements for comparability. Okay, and then really what I want to know is why there is a variance between the ratios year over year using plain language. So by the time you're done, I would like to know, hey, these are the issues facing the company, and they're supported by these financial ratios from the financial statements. And this is the story, and this is what's happening in the environment. That's really all you need to do. Okay, now remember that I do have very specific requirements, again, that I want 2 years compared. Okay, you need to pick a minimum of 3 ratios per type. And the types of ratios that we have are the operating ratio, the balance sheet ratios, and the cash flow ratios, which will specifically be focused on the cash flow itself. All right, folks, now again, you can pick the 3 relevant ratios, okay? So for example, don't come to me looking at, don't come to me with a stock turnover count for a company that only delivers services, okay? For example, a software development company. You need to focus on what's relevant for the company type, as well as the way the company does business. Okay, folks. So let me just walk you through. I will grade your assignment based on this matrix. And I just want to again say that team members, each of you need to be contributing and each of you need to present on the section of work that you did. And you need to be able to answer my questions. So it's really important that all of you are involved in the process and actively engaged in the research and the ratio analysis. Okay? Have a good read through these instructions and let me quickly take you through the process of actually selecting your company. So what I am going to choose is I am going to choose Microsoft. So I'm going to go to the Acct SEC site. And I'm going to go click on Company Filings Search. All right, so the example I'm going to do with you is Microsoft. And no, thanks, I'm not going to give them feedback today. But let's do Microsoft. Folks, I've got a couple of options here, but I know it's going to be this one, Microsoft Corp, because this over here is the ticker. So on the exchange that they are listed on, that ticker is MSFT, and that is how they are identified. So let's do that again. So I'm going to search, and as you can see, I've got Microsoft Corp, okay? And I'm going to click on Microsoft Corp. All right, and then I'm going to search for the 10K. Give me a minute. Let me go back. Let's do this. We go to the next 14. Oh, here we go. Filing type is the 10K. See that over here? All right. Then you click OK, search. All right. And as you can see, I have the 10Ks for Microsoft. You can see that the financial statements for the 2020 financial year were published in July. And normally the rule is that publicly listed companies are supposed to present their annual financial statements. I think last time I looked was within 40 days of financial year end. It may be fewer, but you can see that these guys delivered within 30 days. So that's quite good. Okay, so let's have a look at the document. So you click on the documents. You'll see the 10K over here, see the description, and then you click on the actual form itself. And it will pull up your viewer. All right, now if we have a look at the 10K, this is what it looks like. Now this is a specific format, it's a form that the folks are required to complete. And this form specifies exactly what the requirements are not only is it US GAAP, but it's also any additional requirements for the purposes of publicly listed companies. Okay, folks, so as you can see, it's Microsoft Corporation. The trading symbol or the ticker is called MSFT, and they are listed on the NASDAQ stock exchange. All right, folks, so the main areas of concern that you will be researching is going to be item 8, being the financial statements, and item 7, being the management discussion and analysis. So let's have a quick look at the MD&A. The MD&A tells you about the business, tells you about the operations, it tells you about the drivers of the business. So folks, when I talk about a driver, I'm talking about something that really contributes the most to a financial statement line item. So let's have an example. Let's say that your wages are your largest percentage of expenses on your income statement, right? Therefore, your wages is the driver. But the question is, what is the business reason behind the wages being the driver? So let's say in my example, the reason why wages increased so much was because of union negotiations. But we go one step further. The union negotiated for such extensive increases because, firstly, inflation is high. Secondly, it was time for an adjustment because the folks hadn't had an adjustment for 2 years. Those are examples, okay? Another reason why there could be an increased or a driver of wages increasing, it could be because you've expanded production. So there's many things. It could also be that you've gone and bought a business through a merger and acquisition and taken on those employees and those costs. So folks, remember, it's always about the story behind the numbers, okay? So even though this is the language that you're learning, the US GAAP language, there are requirements into how you structure your sentences and your grammar and so forth. And that is what this project is all about, is how the US GAAP actually tells you the story. Now, again, if I refer you back to the very first lecture, I spoke to you about accounting and how it tells a story. And what I'm giving you now is an opportunity to prove it. Okay, interesting. Look here. In the MD&A, they're talking about COVID and how COVID has impacted operations and everybody that, all the stakeholders. So let's have a quick look. They are expecting negative sales due to reductions in advertising spend. They did have increases in their OEM surface. So OEM is original manufacturer products. So that's going to be their software that's licensed. Surface is going to be the laptop product, and gaming, because there was increased demand for remote work and playing. People were trapped at home, right? But search, which is another product of theirs, was negatively impacted. So then mapping, because people weren't traveling so much, right? And then also people weren't doing much research. So, you know, there wasn't really much of a drive for advertising. All right, folks. So that's an interesting little note in the MD&A about COVID and the impact. Okay, so also it tells you what the reportable segments are. It gives you a breakout of what the biggest contributors to the financial statements or the growth is, and you'll see that they have some metrics, and then they have a summary, and they talk about the expenses, and they talk about their gross profit, and they talk about all the stuff and all the drivers in the business. And basically what they set out to do is tell you the story behind the numbers. Okay, what's interesting here is something that we have discussed in our class, which is research and development costs. Now, according to US GAAP, you cannot capitalize research and development costs in respect of software development for the work that you do prior to the product actually being ready to be released. So if you read here, have a look at how they actually, here it is. Have a look at how they actually account for their research and development costs. Very interesting and very applicable. Okay, so research and development costs, they're charged to expense until feasibility has been established for the product. In other words, they know that it's ready for use, okay, or that it's going to work and it's ready for development. So you have the expense part, which is the research part, setting it up, seeing if it works. Then you have the capitalizable part. In other words, those costs go to your asset. And that's for that development work after you've assessed feasibility to the time that it is ready to be released. Okay, so there's 3 little steps here. So that's interesting about their research and development costs. All right. Okay, folks, so this is the MD&A. Let's go have a look again at the financial statements. So what you do is you just go back to your index, you go to your financial statements and supplementary data. What I really want you to focus on is what the financial statements say. Okay, as you can see, there are 3 years of income of financial years compared on the income statement and only 2 years on the balance sheet, which means you're going to have to pull the prior year's 10K so that you're able to actually do comparable ratios. And the reason why I'm saying this is because when you are comparing an income statement item to a balance sheet item, you need to average out the opening and closing balances. Don't forget that. Okay, folks? Just looking at this, I just wanted to take you through the accounting policies. As you can see, this is really a guideline of the language that they're using for building these financial statements. Do you see that it's prepared in respect of US GAAP? Okay, so it's prepared in accordance with US GAAP. See that over there? Okay. Then they also tell you that they have some estimates and assumptions. And remember, this goes back to why we can never ever say that financial statements are actually 100% correct. And these are the items that are affected: assets, liabilities, revenue, and expenses. So I will take you through another couple of examples about where management assessments are actually really contributing here. Again, they've actually put in a little comment here about COVID-19 and that they do have some changes to their risks and uncertainty. Okay. Also, have a look here. In July 2020, they actually increased the estimated useful life of their assets from 3 to 4 years for server equipment and from 2 to 4 years for network equipment. So folks, what's actually happening here is that going forward, depreciation will be smaller and for a longer period of time. Now, according to US GAAP, what you need to do when you are changing an estimate is all you do is you change the way that you calculate it going forward. So in this case, let's say they've increased the period of time from 2 to 4 years, and we're talking about end of the first year of the product life. All you would do is just break out or just apply depreciation over the following 3 years. All right, so that you're actually writing it off at a rate of 33% a year. That at least you're writing off the remaining book value at the cost or at the rate of 33% a year. Okay, so that's an example of how they actually do their accounting. Right, so that is what the accounting policies are all about. All right, let's just have a quick look here. They tell you how they recognize revenue, what judgments they put in. Let's see, interesting points here. Let's look at research and development. As you can see, what is required here is that in accordance with US GAAP, which is something that IFRS doesn't ask for, what is required here is that research and development costs are not capitalized. Okay, so the research and development that is done up to the point where they can actually say that they have a technological feasibility. In other words, they put up like a pilot, they've tested it, they know that it's going to work, and now they're going to invest in resources. So once it reaches feasibility, okay, fit for purpose testing, then only after that can those costs be capitalized and put to the asset itself. So again, guys, we're referring to chapter 9 when we think about this sort of stuff. Okay, let's see if we've got some more interesting points here on these financials that would be relevant for you. Let's go have a look. All right, if you have a look here, inventory. Look how they calculate the inventory. It's based on average cost. In other words, WAC, weighted average. And it's subject to the principle of consistency and prudence, which is the lower of cost or net realizable value. So if you're going to sell something for less than it cost you, you're going to have to pass this journal entry. You're going to debit losses or stock write down which is going to be an expense. That's going to be an expense. And then you're going to credit your inventory so that you bring in the inventory values down to net realizable value. Okay. So that's an interesting one there for you. A great example from what we've been learning in class. Okay, let's see what else we've got here. All right. Then they have notes on the actual financials. This is just supplementary data. It really breaks it out for you. So for example, you would see what the components of inventory are: raw materials, work in progress, and finished goods. If you do accounting 2 with me, you will learn about these, and you'll learn about how to determine the cost of manufacture, which is all about direct labor, direct materials, and manufacturing overhead. So folks, this is really what your notes are about. Okay, so let's go back to the title, and I wanted to show you one more thing. Management has to certify that they are responsible for establishing and maintaining adequate internal controls over financial reporting. Okay, tells you what they need to do. Okay, and furthermore, management has conducted the evaluation of the effectiveness of the internal controls, and as you can see, they use the COSO framework. See this one? Internal control from 2013, which is the latest one, and that there were no changes in controls, and therefore there was nothing that is likely to materially affect the financial statements. Now remember, that is one of the principles of accounting, which is one of the 4 principles that you were taught in, I think, chapter 6. And what it tells us is that you don't have any material errors, and a material error is defined as an error that would cause an investor to make a different decision than what they would have if they had known these facts. So again, Enron, they materially misstated their financial statements, and what happened was people were investing when they very well shouldn't have because of those material misstatements. All right, then also, if you have a look here, you will see that we have an independent report by the auditors, and basically what they do is they give an opinion on the financial statements. So really, it's an opinion on the internal controls and the financial reporting. And then they also specifically go into what it is that they are not qualifying. So the goal is to have an unqualified audit. And that unqualified audit will tell us that all of our controls are in place and effective and operating. And also all of our substantive accounting, in other words, the amounts that we process, are reasonably and fairly representative of the financial position and the financial performance of the business. All right, let's see what else I can show you here. Yes, I wanted to show you the management certification that is required by the Sarbanes-Oxley Act, which is something we discussed in the very first lecture, being the fallout from scandals such as the Enron scandal and the WorldCom scandal. So I'm just looking for that for you. If you look here, the managers are actually stating these three people here, the CEO, the CFO, and the CAO, so Chief Financial and the Chief Accounting Officer and the Chief Executive Officer, are personally stating that it's their responsibility to draft these financial statements and that they are accurate, okay? And also, they confirm that they have used Deloitte and Touche to represent an opinion on the financial statements and the internal control in accordance with PCAOB which, as you know, is the Public Company Accounting and Oversight Board that governs the accounting of publicly listed companies. So sometimes they have requirements over and above US GAAP with regards to disclosure. Probably usually more disclosure required, and those are the requirements of the PCAOB. Other things that they do is the PCAOB actually audits the auditors, right? So a lot of this work is still checked by the government entity called the PCAOB. All right, folks, so this is what the 10K looks like. Now, the next step in your research is that you would want to go and have a look at the investor relations page of the company in question. Now, normally, you would go to company information for this. So in the case with Microsoft, your company information is sitting at the bottom of your page over here under company, and here's investors. This is the investor relations site. There's some videos that go through the earnings, some stats, and some announcements. Look here, Microsoft Cloud Strength drives fourth quarter results. Folks, this goes back to my previous discussion in this lecture about what a business driver is. So look what they're saying. They're saying that Microsoft Cloud has increased sales so dramatically that it is the business driver of the increases in revenue for Microsoft. So your business driver is Microsoft Cloud. And your reason for that is because businesses are wanting to get away from having to run the costs of data centers and go onto the cloud so that suppliers like Microsoft and Amazon and Google, for example, they actually manage the data centers, and it puts less of a financial burden on the companies as well, because they can actually manage capacity between companies and all sorts of economies of scale and enhancements that normal companies can't do on their own. So Microsoft Cloud is really growing super fast. All right, if you also have a look at the investor relations site, they've got some information on events, and also they will have information on earnings and financials, company information, annual reports, environmental, social, and governance reporting. So there's a lot of stuff here that you can actually have a look at. As an example, investors are more and more interested on whether companies are actually complying with economic, social, and governance needs. And people are more interested in like what are they doing for the environment to make sure that their footprint is not negatively affecting the environment. What are they doing in respect of looking after their communities and corporate governance? How are they making sure that they are using the highest standards of corporate governance and protecting the assets of the business through corporate governance principles? All right, so really what the purpose of ESG is to really explain to an investor where the long-term profits and the sustainability of the business is coming from that perspective. All right, so I think that's pretty much everything I've got for you. Here's the press release. There's a webcast that you can listen to. Most investor relations sites will have this. Okay, you've got the earnings call, you've got the transcripts, because people dial in, all the analysts dial in and listen to the earnings call and go through the deck. So that's what the investor relations site is all about. All right, folks, so I just wanted to show you a really good example. I'm going to show you UPS, just because I said it was amazing work. Now, if you have a look at it, they talk about what UPS does, what their business model is, how do they make money. They explain it. They tell us about the challenges in the market, how they plan to grow, what their strengths are. And then we start looking at the operating ratios. They're giving us operating profit. See what they're doing. They're taking an excerpt of the financials and they're showing me how they've calculated it. Okay, and then they're giving me the numbers. This is really great. Okay, look how they calculate net profit percentage. So I can actually check as they're going through the presentation. I actually grade the financials on that. So this is really a great example of a presentation. Okay. But remember that the whole issue is really, we need you to tell me the story. So here's the financial analysis. They've got a seasonal growth cycle. They've got low net margin, so that's the disadvantages. And they say it's a safe investment, and here are the reasons, which is the story behind the financial statements. And don't forget, folks, that you need to cite your references. Okay, another really good example is this Harley-Davidson project. This particular group actually dressed in orange and black for the presentation. Really, they did a fantastic job. Okay, so they take us through what they do, what their business model is, how's the market looking. They show us some business drivers. For example, they tell us that new registrations of faster motorbikes with the higher CCs has dropped off, and for less is pretty much constant, or it's increasing slightly. They're talking to me and they're telling me about the issues in the market and how it's actually affecting the business. So the sales are down, the return on assets is reducing. You know, here are the comparabilities. Okay, when they ask how they will grow, well, they're assessing their competition, and then they look at their operations and they're telling you what their gross profit and their net profit is and how they're actually increasing it or decreasing it, how they're handling their working capital, being their debtor days and their creditor days. All right, and also they're giving me information on the inventory turnover. So what they're telling me is, even though we have reduced sales, we're still improving on things like our stock turnover ratio. So we're selling at a faster rate. So our inventory is not sitting in the storerooms for months on end, costing us unnecessary money. Okay, and then they did their balance sheets analysis and their cash flow analysis, and they tied that all in to what is happening in the market and what the challenges are that they are facing. Okay, so have a look at this. All right, this is a great example. Okay, folks, well, I hope that takes you through everything that you needed to know. Please do have a thorough read here. And of course, you know where you can find me. Okay, so folks, I recommend you take your time, do the research, meet on it, discuss it, decide which company you want. That'll be your assignment for week 4. And then from there, what you need to do is really look at the requirements, understand how you're going to split up the work and how each team member is going to contribute. So remember, everybody needs to present regardless of what they've done, and everybody needs to present on the work that they've done. All right, folks, I hope that you really enjoy your time doing this project, because at the end of the day, this will empower you to actually articulate the message behind the numbers. And this will really give you an edge when it comes to doing presentations or comes to actually discussing items such as this, because what you will learn in this process is how to make an argument or how to back up what your statements are using the financial statements. All right, folks, I hope you have a great day. Thanks for joining me, and I will see you soon. Bye.